Meta's R&D spending has surged 46%. Can AI advertising really deliver investment opportunities? The stock has been volatile, and the market is split today. We'll break down the data and logic to show you Meta's strategy and potential. Hi everyone, this is Stock Market Breakdown. If you want to go beyond just watching price moves and actually understand the logic behind the market, make sure to like and subscribe. Let's dive right in. Meta's Q1 earnings had some big highlights. Total revenue rose 33% year-over-year, and net income increased even more, which shows the company's business remains strong. Of course, expenses have also gone up, with R&D spending hitting 1.46 times last year's level, mainly targeting AI ad optimization, Reels algorithms, and metaverse tech. Numbers can tell part of the story, but more importantly, this spending reflects Meta's strategy, using technology to boost ad efficiency and user experience. Ad click-through rates and conversion rates have improved noticeably, which indicates AI recommendation systems are starting to have a real impact on monetization. At the same time, daily active users have stayed stable, giving these technologies a large foundation to operate on. You can see that Meta's high R&D spend isn't just throwing money around, it's a strategic bet. The numbers back up, but the real focus is on how these investments boost ad performance and user engagement for investors. What matters is whether the tech actually delivers and turns into real revenue, not just raw growth figures. Reels short-form video has become the new engine for Meta's ad growth. You may have noticed user engagement is rising, and advertisers are more willing to invest because AI recommendations make ad targeting more precise and effective. These improvements aren't just in the numbers. Click-through rates went up 10% and conversion rates 8%, but they show that Meta is using technology to increase platform value. The amount of content being uploaded is also growing, showing the ecosystem is becoming more active. In the Asia-Pacific region, our revenue growth has been particularly strong. That's not just from natural user growth, it's also proof that the technology is delivering results. In other words, technology is really starting to change how ad monetization works. These numbers give context, but the real takeaway is understanding the logic. Can AI and ad strategies continue to create value? Will users stay engaged? That's what determines long-term returns. Short-term fluctuations are secondary. Meta's investments in AI-driven content recommendations are steadily turning into real results. Q1 data shows deep learning models improved at targeting, with impressions up about 19% YoY, click-through rates up 8%, and conversions up 10%, more than just numbers. This enhances user experience and platform efficiency. Instagram and WhatsApp maintain around 1.5 BS and 1B daily users. Reels uploads rose 20%, and user interactions grew 7%, showing content and engagement are rising together. These metrics reinforce Meta's global ad strategy, highlighting how tech drives real monetization and sustained user growth. These numbers show that the tech is starting to deliver real results, but the focus isn't on the stats themselves, it's about understanding how AI boosts and monetization and user engagement. Investors should watch whether these technologies can sustain revenue and user growth, not just short-term swings. Grasping this logic is key to judging Meta's long-term investment potential. Facing competition from TikTok and YouTube, Meta has rolled out multiple strategies to strengthen its ad ecosystem. Reels daily active users grew around 8%. Ad click-through rates increased roughly 10%, and ad revenue in the Asia-Pacific region was up about 15%, with North America and Europe up 12% and 10%, respectively. Around 70% of R&D spending went to AI ads and content recommendation optimization, with the remaining 30% on metaverse infrastructure. This shows Meta is combining technology, content, and creator incentives to improve ad efficiency and user stickiness. A revenue share remains high, providing steady cash flow. Overall, Meta isn't just chasing short-term growth, is laying the groundwork for long-term competitive advantage. This demonstrates that Meta's R&D spending has a clear strategic purpose. It's not just throwing money around. investors should focus on whether these technologies are being effectively implemented and if revenue and user growth are sustainable. That's how you evaluate long-term investment value, not by looking at short-term profits or stock fluctuations. Macro conditions also affect revenue, while budgets are generally rising. Interest rates, inflation, and currency fluctuations can cause short-term volatility. Even so, Meta's Q1 revenue still grew about 12% year-over-year, with Reels click-through rates up 10% and daily active users holding steady at 3.56 billion. This shows the platform has resilience against macro swings. Analysts note that this indicates a stable ecosystem, where short-term shocks don't disrupt long-term growth. Additionally, advertisers are willing to pay more if average cost per click rose roughly 12%, showing that technology optimization is delivering tangible business value. Overall, short-term fluctuations are inevitable, but the key is business fundamentals. Meta's ad revenue is still growing, and its user base is solid, showing resilience against external shocks. Investors should focus on long-term trends rather than short-term market sentiment. R&D spending isn't limited to AI, as it also includes content creation incentives, data center infrastructure, and AI model training. This broad investment helps establish stronger technical barriers. Short-term profits may feel the pinch, but as the technology and mechanisms mature, their impact on revenue will become clearer. For example, when the platform can predict user preferences using AI, advertisers are willing to invest more, boosting ad prices and total revenue. Investors should see this spending as paving the way for future sustainable earnings, not just a short-term cost. In other words, high R&D isn't just burning money, it's building a long-term, stable business system. Investors need to look at whether these investments can actually be implemented and drive revenue and user growth. That's the real measure of long-term value. In the coming years, Meta's AI advertising and metaverse initiatives will define long-term value. Reels daily active users continue to grow, engagement rates are rising, and AI technology is constantly improving ad precision and user experience. The global short video market is still expanding rapidly, and investors should watch how Meta leverages AI and data advantages to capture market share. As the technology matures, advertisers may shift more budgets to the platform with the best performance, meaning Meta's long-term revenue potential and shareholder returns could increase. If AI and its strategies succeed, these trends could drive sustained company growth. Investing in Meta isn't just about looking at today's numbers, it's about following trends. The logic are user growth, engagement, and revenue trends sustainable? Is AI technology truly delivering? These are the factors that determine long-term returns. Understanding this logic helps you stay calm during stock swings and focus on real opportunities. Overall, Meta shows potential in revenue, AI implementation, and user growth. While R&D spending is high, the company is translating these investments into more efficient ad systems and a more active user ecosystem. As Reels and other platforms continue to develop, AI recommendation technology is improving ad delivery efficiency and user engagement. This not only supports future revenue growth, but also strengthens Meta's position in the global short video market. Competition remains intense, but Meta's technical edge and large user base position it to maintain leadership and deliver long-term shareholder value. Thanks for watching. If you found this helpful, remember to like and subscribe, and drop any questions or thoughts in the comments. Meta's AI ad strategy is worth following closely, but investing isn't about gut feeling, it's about combining data, logic, and trends. What do you think about Meta's long-term opportunities? Let's discuss in the comments.